Good evening, everybody. This is John Seville from Acorn Wealth. This is your executive summary for stock setups for the 28th of January. My voice is finally coming back a little bit, so hopefully now everyone can hear me reasonably well. Okay, so let's have a look at the S&P 500. I talked in the trading room yesterday about starting to have kind of some intraday highs that would push up into this 1920, 1930, even 1940 level, I thought. But continuing to respect the open range of January 15th, which was a high of 1916, that we would continue to close below there for the rest of the week. Of course, then we have a new open range set at the beginning of next month. So we had a good day for the shorts today. You may not be able to see it just from looking at the S&P 500. But I went through probably about 500 different stocks tonight, maybe more than that, about 650. Went through 500 potential momentum trades yesterday, looked at those today, looked at about another 150 today, and very few looked like they were building any momentum. Again, that looked like more oscillation that had stretched to its means. The only decent momentum trade I had to show you was NUGT, which is a gold, obviously a gold long. Now we've already talked about going long gold as in Rand gold, but NUGT, the symbol here, which is the gold miners bull, you can see that's obviously built momentum, has had some powerful days. That might not be too bad as a potential long at $25, and or even just a little bit above 25, so 25.13. But essentially what you're looking for is buying the 9-day or 5-day moving average. The 5-day moving average is what I'm most looking at. You can see it's currently at 23.23, but then if you extend that another day, it's going to be somewhere up around this 25, depending on where it opens tomorrow. So that could be an interesting long at the $25 level, and I'd expect it to be able to rally to at least up to this point here at 29. But by that point, we would just raise the stop to protect the entry point and see how far this can go. So this is more of a momentum trade. So again, I let this one run. But once it's had a bit of a rally, I'd move the stop loss up to protect the entry point. So again, looking at say 25.13, but really looking at where that 5-day exponential moving average is. We can try and get a bit of a read of that by projecting the vector of the line here. So you can see if we're going forward about another day, we're going to end up maybe even a little bit higher. We can also go to the 1-hour chart. Yeah, so you can see that if we look at the 1-hourly chart, those averages are moving up quite quickly. The 5-day moving average already at basically 25.31. So I'd basically be putting in more likely just a buy stop at 26 by the continuation of the move. If you're lucky, watch for a pullback, and you might be able to get it around that 25.30. But that's kind of one of the two ways I play it. Either wait by the continuation or by the pullback to about 25.30. Again, it's going to depend on where it opens in the morning. And in terms of setting a stop loss, obviously it's a very volatile trade. So I mean, this is going to be for people that are willing to take that kind of level of risk. I'd be wanting to look at my stop loss below the gap up level. So we're looking at just looking at this level here, looking at that level there. So we're just going to do a Fibonacci retracement on this move. So you can see it kind of coincides with this point here. So I'd just go a little bit underneath there. I'd be looking at 22.31. Okay. On the short side of things, however, there's been lots of great movement. We saw PII drop significantly today, CHTR dropped, WMGI, a lot of them all across the board, especially some of the newer ones. ILMN had a beautiful performance. Again, we talked about this in Trading Room last night, that it was respecting this, it was this breakout trade that was respecting resistance perfectly well. Just rallied up and then just dropped straight down over 6% today. So the options up significantly, really happy with that so far. Also Red Hat, of course, which I had mentioned I bought a bunch of puts in on Friday, dropped dramatically today, 4.19%, just straight down, and looks like there's much more room to go there. So I don't want to overload people with too many new selections. We've got a lot on the board, and obviously we'll review a lot of these stocks tomorrow, but there were two that I thought were worth mentioning for those who are still looking for shorts. EVR, Evercore Partners. BlackRock sold a bunch of this. They owned 10% of the stock, and they sold a bunch of it recently in January. And main reason for this was just a very strong support levels have been broken, both at 46. That was a high frequency buy level. That's been broken. There was also support here at 45. That's been broken. And if you go back and see, there's quite a fair bit of potential room to drop after that shelf of supports obviously been taken out. So this would, looking at our Fibonacci retracements, we'll just be going from the bottom here. You can see that we bounced off the 50 and rallied back up right up into this resistance. So this looks like from 43, looks like it could easily drop down to about 36.58. So let's say 36.83. So that's what I'd be looking at as a first target, 36.83, from where we're currently at. Okay, and I was looking at the options on this. The June $45 puts are $4.90, and those would be the ones that I'd be looking at. Now, there's not a lot of open interest on these, but the spread's not too bad at all. So there's obviously some volume there on the bid and the ask. There's just not a lot of them have changed hands yet. So that was EVR. And in terms of a stop loss, so we're looking at basically a breakdown below 43.83 as an entry. And as a stop loss criteria, I'd be looking right up here, above where this high frequency trading level was, the lowest 46. So I'd be looking at 46.27. So we've got basically less than about a $2.50 risk for over $6 reward, possibly more if it just keeps collapsing. The other one that I liked was MFLX. These are a printed circuitry technology, and what I liked about this was this massive double top with a lower high. So you can see the kind of flat bottom, but the lower highs across the top. And now, when you're dealing with this amount of scale, you can't measure it just equally like that, because you can see that means it's going down to, some really low levels. What you want to do is, I measure that with a logarithmic chart, and that actually takes us to the duplication of the double top on a logarithmic chart takes us down to a target of $9, which is where this rally began from. Now, they had a very sharp drop, and then if we zoom in, you can see they've rallied back up in a rising wedge formation. So again, just like the other stock, these are both good for either a stock, things I'm looking at as a stock trade or an option trade. So if you don't like the liquidity on the options, you can always look at the stock. Again, I mean, this has got a $5-6 potential to fall from here, and so I had an order in to short this if it breaks 14.90, and I'm looking at it again. The target could be as low as $9. So I would be putting my stop in above today's high at 15.34. So looking at 15.43. And again, the entry criteria is looking at as a break of 14.90. And again, the target I'm looking at is down into these 9s, so we'd reevaluate as it drops. But I'd look at, say, 9.53. We'll just go back and look at that previous zone. Kind of look at that where that breakthrough was. So the low of that candle was 9.30. So I'm looking at 9.37 as a target at the moment. But again, the options, these report on February 3rd. So the speculative play are the February $15 puts, which are $1.15 as an options during earnings type of play. But for not a lot more, you can get the May puts, $15 puts for $1.85. So obviously the February ones are going to be very speculative, but could potentially be very lucrative if they have a nice big gap down. But those are the options I look at on those. So again, we'll see you all in Trading Room tomorrow. Now that my voice is back, we'll be resuming the daily executive summaries in the video format. So look forward to seeing you all tomorrow in Trading Room. Take care, everyone. Have a great night.